Hello, welcome back to Asset Informant. If you're looking to build your fortune, investing can be one of the best places to do it. While starting with $1,000 may not sound like much in the grand scheme of things, you can grow your money over time and create a better financial future for yourself and your loved ones. Today, I'm going to show you how to invest your first $1,000. Before the video begins, please give it a like. And if you want to see more, please subscribe to the channel. Now, let's begin. Number 1. Start or add to a savings account. With the best savings account interest rates around 3%, but inflation running hot, putting money into a savings or money market account may not seem like a smart investment. However, millions of households don't have adequate funds for an emergency. If you're in that boat, a savings account is a great place to start. Here's why putting money into basic savings is a great investment. Rainy days are inevitable, while predicting life's twists and turns and when they'll occur is impossible. Being prepared with some cash on the sidelines will always help to cushion the blow. And if it keeps you from borrowing money at high interest, like via a credit card, then the small return from the savings account was well worth it. Strive to have at least 3 to 6 months worth of cash stashed. Keeping some cash in CDs or certificate of deposits or Series 1 savings bonds can also bolster a rainy day savings stockpile. The interest rates can often be a bit higher than a basic savings account, although the trade-off is that they aren't as easy to access if you need the money in a pinch. Number 2. Invest in a 401k. Who doesn't want a pay raise? While many are dissatisfied with their compensation, they may be overlooking an extra pay perk their employer offers, a matching 401k or similar company-sponsored retirement plan account contribution. The mechanics are simple. If your company offers a match, the business will deposit the same amount as your contribution, usually up to a certain percentage of your gross salary. For example, if a company offers a 3% match, it will contribute $30 for every $1,000 of your paycheck, usually only if you opt to add the same 3% of your pay to your 401k or similar retirement account. Number 3. Invest in an IRA. If you don't have access to work-sponsored retirement plans, or your retirement plan won't allow you to add extra money, you aren't out of luck. That's where individual retirement accounts, or IRAs, come in. There's no company match with an IRA, but if you have earned income through a job or self-employment, this option is worth considering. There are 2 basic types of IRAs, traditional and Roth. A personal contribution to a traditional IRA is often tax-deductible and earnings are tax-deferred until they're withdrawn. A Roth IRA is an after-tax contribution, so it gets no deduction, although a tax credit is available for traditional and Roth IRA contributions. Number 4. Open a taxable brokerage account. If you've exhausted the first 3 options and still have $1,000 to invest, opening a taxable income account, sometimes called a brokerage account, is another solid option. Think of this as a savings account, since any realized earnings and interest will be taxable each year. However, the potential upside is higher than with a savings account. Granted, all investing involves risk, and there's no guarantee you won't lose your $1,000 in this process. However, there are plenty of options available in brokerage accounts to help mitigate the turbulence that comes with investing. For example, there are numerous low-cost mutual funds to choose from, or other investment vehicles, but more on that below. Also, remember that depositing $1,000 should only be the start. Investing works best if you make regular deposits. The more frequent, the better. Once you establish a brokerage account, consider setting up recurring deposits, perhaps monthly or quarterly, to continue building toward your financial goals. $1,000 may not seem like much in the grand scheme of things, but don't knock the power of the money you invest. Even $1,000 is a fantastic start in building long-term financial flexibility. Number 5. Invest in ETFs. After you open an IRA or brokerage account, it's time to start choosing where to invest. If you're just getting started, an exchange-traded fund or ETF is an excellent place to begin and could be a great alternative to more traditional mutual funds. There are thousands of ETFs to choose from. Many of them track a benchmark such as the US bond market or a stock market index, for example, the S&P 500 or the NASDAQ Composite. Others track broader sectors of the economy, such as technology or healthcare. Some even get more specific and invest in themes such as cloud computing or renewable energy. ETFs are easy to purchase, on average have lower fees than many other investment options such as actively managed mutual funds, and can accept even small deposits. If you have $1,000, learn how to invest in ETFs to begin your investing journey. Number 6. Use a robo-advisor. Not interested in searching for and managing an investment portfolio? Consider using a robo-advisor. A robo-advisor is an online service that automates certain parts of a financial plan and investment portfolio management. There are plenty of robo-advisors to choose from. Most of them have little to no initial deposit minimum. $1,000 is more than enough to get started. After you answer some questions, the robo-advisor will choose a basket of funds or ETFs tailored to your long-term goals. Management fees can be quite affordable too. A typical robo-advisor usually charges less than 0.3% per year. For every $10,000, that's $3 in annual charges to your account. The service will help you set up a plan for making recurring deposits and investments to help you reach your financial destination. Number 7. Invest in stocks. If you want more control over your investments and which businesses you own, consider purchasing individual stocks. Even with $1,000, it's possible to build a well-rounded portfolio of starter stocks. Many brokerages even allow investors to purchase fractional shares of many companies, so diversifying your account is possible even with just $1,000 to start. It's possible to own individual stocks in both IRAs and taxable brokerage accounts. Additionally, gains in individual stocks aren't taxed at the federal level until you sell them, although gains are taxed by most states. In fact, if you hold stocks for more than a year, the earnings may not be taxed at all by Uncle Sam, which makes owning individual stocks an ideal strategy for deferring taxes in a brokerage account. But remember, stocks represent an ownership stake in a business. Few people would start a new venture with the intent of staying in business for just a short time. Owning stocks works best in much the same way. Owning a piece of a quality business becomes increasingly powerful the longer you stick with it. So if you go this route, it's important to do some homework and make a purchase with the intent of holding the stock for at least a few years, if not indefinitely. This strategy has helped make Warren Buffett the wealthiest investor on the planet. Investing $1,000 may be just the start of your investing career, but make it count by taking the time to understand the available options and how to really make that money work for you. You can add to your account over time and build real wealth for yourself and your family. Thank you for watching, and please hit the like button, subscribe to the channel, and enable post alerts to view more of our future videos. After saying that, keep watching our videos, and I'll speak with you in the next one.